All right, we're live on a rare Thursday live stream. What's going on? How come we're doing it on Thursday, Ben?
U.S. Thanksgiving?
Yep, let's call it that.
U.S. Thanksgiving. It's a travel day tomorrow for me, so we are recording early. And quiet session today, obviously with the U.S. closed, and short session tomorrow. We thought it'd be a good day to put it out.
Gotcha.
Yep.
Sounds good to me. Yeah, like you said, it's been kind of a quiet week. There's some things in the news too that things are still happening, even though it's supposed to be a holiday in the U.S. The Canadian markets are open.
Yep.
What do you want to start with? What's the week been like?
Yeah, well, the week's been a little bit quieter. The biggest announcement this week was Chair Powell was announced that he's going to be the boss of the FOMC for the foreseeable future. So I know that had been up in the air. They talk about Brainerd as potentially being taking a spot. She's coming as vice chair, so I think they probably some kind of agreement that she will be next in line if Biden gets in again next term. So I think more than anything, that was a positive from the perspective is we know there's consistency and continuity. So that was probably the biggest, I'd say, news piece of the week, and so that was the biggest one.
Okay.
Yeah.
A couple other things that we've been tracking, right? Like Cathie Wood from ARC announced that she has a new fund coming out that is like ARC on steroids. What's that all about?
I don't exactly know what it's going to look like when she comes out, and it sounds like leverage when I hear something like that. So it sounds like there may be some kind of leverage associated with it, or potentially going down the chain. I mean, she sells ARC as the first ever private equity or venture capital ETF fund family in the world. So potentially she's going down into venture capital or maybe angel type of investing. So, you know, maybe she's going that route. I haven't seen it, don't exactly know. I know she's doing some internal testing with her employees, but she's definitely look for the moonshot.
Yeah, I bring this up because do we still hold that? We still hold some ARC?
So we hold ARC F, which is the financial. Yeah, we don't own the ARKK because my views don't completely line up with her views on the world. Yeah.
Well, here's what says ARK Invests. Cathie Wood says her firm is internally testing a fund that bets against major stocks in the benchmarks. Yeah. So yeah, I think you're right about that.
Yes, so that's fair. I mean, I think that it's I don't know if it's hitting out against her critics potentially. It sounds like a little bit with that. I think that you know, she's got a pretty specific view on how the world plays out. For me, I don't take a blind bet on one person, and she seems to have kind of that cult-like status where people bet kind of exclusively on her ability to see the future. And so maybe she's right, maybe she's wrong. My blockchain crypto view lines up with hers, but you know, the genomics and some of the other things that she's working on may or may not work. If they do, amazing, but I don't have the same conviction.
Okay.
Yeah.
The only other thing to note that I really noticed in the news was everybody seems to be panicking about Elon Musk pulling out more or offloading more stock. It's almost $10 billion now in the past 2 weeks. Everybody's panicking. What do you think about that?
Some of it, he's got a $3.5 billion tax bill that he owes. So I'd say that it's not a massive surprise that he's selling. You know, he's smart from the perspective is it looks like he almost caught the top when he started selling. So, you know, ultimately people have their specific view on Tesla and where it's going. I still don't get it But a lot of people say it's the technology that's different. Elon, I think, is making a call to reduce risk, and anyone that has that much capital invested in one thing should reduce their exposure. The way he did it and how he does it, yeah, I don't like, but he certainly has to pay a big tax bill, so he's got to get it done before the end of the year here.
Yeah, for sure.
Yeah.
Okay, great. Anything else catching your eye this week, or did you want to just get right into what you've been up to, or what you want to do?
Yeah. So I mean, I think more than this is a kind of a typical Thanksgiving week, volumes have been crazy light. And so, we had some calls this week. People were asking, why is this moving around bigger than other things? And part of it has to do with massive reduction in volume. So, prices can swing more dramatically in weeks like this. So I think that's the other thing I look at, where you see kind of a big $50 drop in gold, for example, in a day. And so it's a bit of a strange week. You had options expiring on Tuesday this week too. So a lot of different moving parts into a thin market makes for a little bit more volatility than usual.
Gotcha. Okay. Did I know you got a big Ben's charts section today. You actually pushed it over the allowable number of charts again this week.
That's it. 2 weeks in a row.
Last week, I know you snuck it in because I wasn't here, and now I think you're pushing the envelope again. Did you want to get right into that, or do you have something else you want to go over?
Yeah, sure. Let's go into that, and then I'll just made a couple of changes this week, but we can hit that after this,
Okay.
if that makes sense.
Sure.
Just let me know when you can see the charts there.
Yep, they're there.
Yep, there they are. Okay, so
no, that's really 2 charts, Ben.
2 charts. Well, maybe I got more than my allowable limit then this week, but
yeah,
we've been certainly have been following the costs for shipping, and there's been a lot of this revolves around the inflation discussion that we continue to have. And so the Baltic Index, which we've talked about a little bit here in that first slide on the left hand side, seems to indicate that prices are rolling over a little bit. The container freight index as well starting to roll over. And the second part of the chart, you see kind of the air freight, which hasn't really been talked about a lot, continues to, it looks like, accelerate, where the kind of the trucking limits haven't gone up like crazy. So these charts are worth watching from an inflation cost pressure. Seems to be a relatively decent sized debate around, are companies just charging more now and taking more profit as opposed to passing through cost to individuals. So these charts are interesting from a frame of reference from that perspective.
Great.
Makes sense. Next one, it's a bit of, this is another 2 charter for you. But one of the things and one of the messages we've been talking about a little bit more is just what's happening with the environment. And we had this COP26, which was in Glasgow a few weeks ago, which is how are we going to work towards getting more carbon neutral? And so the chart on the left-hand side is the cost of carbon credits. And so if we look at companies that are emitting carbon, what they have to go and do to kind of neutralize their carbon exposures to go into the market and buy credits. So what you've seen is prices go vertical, and I'd expect probably more pressure to the upside as companies and countries look to go carbon neutral. They have to get into the market and buy these credits and spend money to neutralize it. But for, obviously we live in Canada, so for the Canadian viewers, this chart came out, which I think is probably a surprise to people, but it's CO2 tons per capita by country. And so as you can see, Canada is by far the worst emitter when we neutralize it per person globally. And so I think that's probably a surprise to people.
Yeah, it's a big surprise. I wonder why that would be.
Well, we would emit a lot of CO2, certainly because we mine, we bring the energy out of the ground. We do a lot of things within the country that are detrimental to the environment. So we emit a lot of CO2 in Canada.
Interesting.
Yeah.
Okay, that's 4 charts. So Are you done? Or
For
maybe-
charts.
yeah.
Okay, we got one more asset mix one, and then we'll finish it off with an Ethereum Bitcoin for you. So
great.
yeah, and so we've talked a little bit over the years, as I have talked about kind of you're trying to adjust to the macro environment that we're having, and we released that Ted Whitehead video today where we talk about the process and the different quadrants. And so this is just a kind of a slightly different view. This is Darius's backdrop around how he views the world and how you kind of adjust based on the environments you see. So, presently, if you look at the data, we're kind of in somewhere around a reflationary type inflationary environment. And so when you're looking at portfolio composition, you look at these kind of backdrops and you try to meld them together based on the probabilities. And so with a view that Q2 next year, we head into kind of a deflationary environment. Deflationary environment looks like something like an 80% kind of bond, fixed income, US dollar, portfolio gold, and a smaller allocation to equity. So as we evolve over the next multiple months, we'll be heading towards that deflation camp if the data is right. And presently, it looks like a 50+% probability that that's where we head. So it's certainly something that I think about continuously is how do we tilt and move back and forth with the environment.
Good.
Makes
Gotcha.
sense. Well, any questions on it?
No questions right now. It reminds me if
Alright.
anybody has questions, you know how to do it. So put them in there, we'll answer.
Yeah, so then this will be the last one. So this is from Raoul Pal's Twitter feed today. So Raoul talks a lot about, he kind of does a lot of charting and logarithm patterns where he's looking at historically how did different asset classes do. And this is the Ethereum Bitcoin ratio against the two of them. And so, this is kind of what we're seeing is what I think we've talked about before, where we get a wedge. And when you wedge into a certain pattern, it typically signals that there's going to be some kind of a big move. If it's at the top of the wedge, typically it means that we're starting to get a significant breakout. And so, if this number breaks and we see Ethereum start to break to the upside, we could start moving towards some of the levels that he think are possible sometime in the next multiple months. And those levels are, kind of 2-3 times where we're presently trading on those investments.
You're right. That was my favorite chart.
I knew it would be.
All right. Well, you did sneak into it 6 charts there, so we'll let that go for today. We did it pretty quickly. So, all right. So you mentioned before we got into that, you did a couple things in the portfolios this week. What were those?
So a few things. I've owned XLRE, which is U.S. real estate, and it's kind of hitting its 52-week high. So I trimmed that and added to the U.S. long bond. So U.S. long bonds got up to the kind of the 165, 66 level or so, which is kind of the higher end of the range. So that would mean that the price would be lower. So we did that. Switched out of Las Vegas Sands into Wynn. Some of that was from a tax perspective, but also just looking at where the kind of risk reward is from now. There's been another company, which I haven't bought yet, but a Canadian company called Thinkific, which we've talked about and are presently using a little bit. It looks like it bottomed this week on bigger volume as well. We've started to see it turn up. So that's a really interesting Canadian tech company that may find a place in the portfolio in the near future.
Interesting technology.
Yeah.
All right. Just flying along here on a Thursday. No questions yet, but so what do we have coming up for next week?
Yeah, so next week, I think we'll see how the market reacts to what's happened here right now. We saw gold sell off a little bit, and I think it was generally on low volume. So I'd be watching that to see what happens there. We saw tech, it looks like potentially have peaked here, at least short term. So I had taken some profits on that last week, as I mentioned. So I'd be watching tech and the US 10-year, which we've talked about. So, if that, those two things tend to work together. So I'd be watching those closely. If we break out of the ranges that the US 10-year bond is, kind of that 170 to 150, if any movement outside of those ranges, I'd start to be concerned about where we are. So those are generally the things I'd be looking at right now.
Gotcha.
Yeah.
Tomorrow the market is open, but short day on the US market. Closes at
Yep.
1, I think.
1 o'clock. Yeah.
So we expect another slow trading day tomorrow.
Yeah, pretty slow. This is by far the slowest week from a volume perspective. Coming on Tuesday, I think volumes are down somewhere between 30 and 40% across the board, like 6 months, 1 month out to a year. So yeah, really, really light volume. So we'll see where the direction picks up next week, and lots to pay attention to.
Awesome. Last call for Q&A. If anybody has any question, put it in the chat or raise your hand. So what's going on this weekend?
Off to Toronto for a hockey tournament. It'll be the first day off in 2021 for me.
That's amazing.
So yeah, we'll still be watching the markets, something to do, still take action, but yeah, be a little bit less focused tomorrow than usual.
Awesome.
Yep.
Well, have a safe trip, and we'll see everybody next week.
Sounds good. Thanks.